Hey there, so, if you're part of the tech industry, chances are you've heard of Silicon Valley Bank, right? But don't worry if you haven't, it was a pretty niche bank that mostly served startups, venture capitalists, and tech firms. Well, here's the thing, SVB recently went bust. Yep, the banking regulators shut it down on Friday after the bank collapsed super quickly. It's actually the second largest bank failure in US history, can you believe it? Today, we're not just interested in why this bank went bankrupt, but also in the history of similar collapses and how banks can cause problems by lending too much money and playing with their clients' funds. It's important to understand the effects of banks taking on too much risk and not being responsible with their finances. Our finance. So, what happened? Apparently, the bank had a cash crunch and tried to sell stocks, shares, and even the whole bank, but investors got scared and it all went downhill from there. The worst part is that many companies and people with money in that bank started pulling their funds out earlier in the week, which actually contributed to the bank's collapse. This whole situation has sent shockwaves throughout the tech sector and even the banking industry. People are worried that other banks might be in trouble or that it could spread like a contagion. If a tech company had money invested in SVB and hasn't withdrawn it yet, they may be worried about what will happen when they need to pay someone, like their employees. Let's take the time machine and go back to 2008. Throwback to 2008, where the famous movies has been taking inspiration, The Big Short. So what happened? The market crash happened because banks gave out too many loans to people who couldn't pay them back, and they sold these loans to other people as safe investments. When many people couldn't pay back their loans, these investments lost value and caused problems for the whole financial system. Banks and other financial companies borrowed too much money and took on too much risk, and when the housing market crashed, they couldn't handle the losses. The government didn't do enough to make sure the banks were being responsible. Overall, the 2008 market crash was a big problem caused by banks being reckless with money and the government not watching them closely enough. So you will tell me, yeah, but what is the relation between Silicon Valley and the big crash? Well, it is the economic pattern. With the current war and tension around the world, the economy around the world leader is really uncertain. The tech sector is really unpredictable, and the government invested a lot of money, $280 billion, in it last year. In 2023, high-tech companies and investors are trying to get rich quick with AI. But there's a problem, the world's biggest economy hasn't been doing so well lately, and now it's time to pay back all the money that's been borrowed over the past few years. The Fed, who's in charge of controlling and maintaining the economy, has been raising interest rates really fast to try to fight inflation. This is happening faster than ever before in history because they're trying to fix the economy. How is the inflation calculated, you'll ask me? The US Treasury uses everyday items like eggs, bread, and butter to calculate the cost of goods. It also adds the cost of living ECT. The tricky part is they can choose which items to include in the basket of groceries used to calculate inflation. You see the inside jokes, right? So now that you see the big picture, what happens after that? Well, nothing good. A total of 1.86 million people lose their jobs, the housing market collapses, and a lot of people lose not only their jobs but also their houses, and roughly 664,000 person being homeless, and all pretty much in 6 month time. Scary time, I told you. Between 2008 and 2012, a total of 465 banks gone bankrupt. The final point. No one is safe. Some big financial players are saying that we're in for a recession that's going to be bigger than anything we've seen before. How can you help yourself? Check out our video on the recession. It will give you some hints on how to prepare for a possible recession. Let us know in comments if you are interested about that topics, and we will go further in details on a next video. By the way, no financial advice. Be safe everyone, and thanks for watching.